The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Starting the home stretch of this year, where we've got about 15 days before the market kind of closes its shutters, bars the door for the last part of this year. Making money is going to be rather difficult, or at least harder than the rest of the year. And probably no bigger move out here than in gold today to take you from heaven to hell, back to heaven if you're a bull, and just the opposite side. Of course, seeing some pressure on the stocks that had been kind of the most shorted. Actually looking at a bunch of those today. And kind of interesting to see the breakout here. A break of the market in some of those stocks. Of course, the bigger stocks not moving that far. We were down a lot more earlier in the day, about 5 points, 6 points lower on the S&P cash, trading out at 2055.31 on the last tick I have. With what do we have here for volume? 2.57 billion shares. So a great deal of volume. Some of that can be attributed to Apple. It's had one of its rare days where it's had a bad hair day, off $283, been bouncing around that level for a while. The question is, what's going on here? And, of course, retail sales numbers a little underwhelming. Not horrible, but here we are, less than 20 points off the all-time highs, and market acting skittish, jittery, too much caffeine, and it's interesting to see this kind of volume come in, especially on what should be the first day of fund buying. And to see us down and see some volume come in suggests maybe we're seeing some people start to exit at least the funds early in this year. I figured that they would wait till the first of the month, first of the new year. But we may have a few people sneaking out the door here. Don't see a lot that's going to happen this week. I think we're going to continue to see a market drift around in this area. Like I said, I don't think I see a great deal of money to be made. I only had, normally I set my, how can I say, I set my positions up to where I'll have 10 positions. So even if a stock went bankrupt, I would lose no more than 10%. Normally, then I set that up for a 1% move to the overall portfolio for a stop, so that most times I won't lose more than 1% or 2% of the total portfolio. And at the worst case, I don't have more than 10% in a single stock. I may have more in an ETF. Those are probably not going to go to zero overnight. But risk management is a big part of the deal. I had one position in both my long-term and short-term newsletters. Probably going to get stopped out today. Both of those positions were options. So in the range of $30 stocks, I lost a little less, probably about 90 cents on average on both of them, because I was playing the options and not playing the actual equity itself. I would have probably lost $2. Something like that, $2 on each of them if I had been playing neither one. But kind of the action in gold is kind of the action that we are probably going to be getting in the equities, and that is a lot of intraday volatility. Hard to play that in a newsletter for more than a day or so. But my guess is that this is one of the last days we're going to see this kind of volume. There were some notes about lower than average sales traffic to some of the retailers. I think part of that had to do with, of course, the weather that we saw in the Northeast, although I'm not hearing many people give excuses today. I was watching the sales, and they were incredibly intense for Black Friday. And I like there's a couple of websites that have pretty good, how can I say this, pretty good coverage of that. But I digress. We're going to get into the market. As always, you can give me a call at 877-927-6648. That's 877-927-6648. And give me a ring. Anyway, on this day in 1853, one of the worst market crashes that have littered the American history and economy is the Panic of 1853. It's in free fall as leading blue chip stocks like Delaware and Hudson Canal Company, the Panama Railway, 6th Avenue Railroad drop as far as 31% below their levels at the beginning of the year. More speculative fancy issues like the Parker Vane Coal Company are down 89% of their value on this day in 1853. And it's kind of interesting because I've been doing a lot of research, going to write kind of a now and then book with Jesse Livermore's Reminiscence of a Stock Operator as the basis to compare historical issues. And part of what he was, what I was working on earlier in the day was the, I think I got up at about 6:15 this morning, looked at the market, and thought, oh, okay, we'll see what goes on here. But certainly I'm looking at and was reading about the what they called the panic around, actually in October of 1907. And I've been looking back through a little bit more about that. All the contributing factors. Basically, the very end of that whole episode in the panic was J.P. Morgan walking into sending his man walking to walk into the crowd where people borrowed cash overnight for a few nights, and said, "I'll give you all the cash you need. Just give me your name and how much you need, and we'll give you, in about 30 minutes, we'll give you a name of a bank. You can go pick up your cash there, and that'll be it." So it is very interesting to see things happen again. They're always slightly different, but they're more the same than they are different, kind of like a snowflake. They can all be unique, but as far as I know, someone hits me with a snowball, there may be a billion different snowflakes in there, but they all hit the same for the most part. Sometimes a little wet, sometimes a little bit more powdery, but always the same. Of course, we have our famous chart of a turkey, and you always want to watch out for that surprise on the turkey's well-being chart. Hope everybody else had a good time. You can also email me at path@tfnn.com if you'd like me to look at a particular stock. I didn't think that waking up this morning that the charts would say us or tell us a lot until the end of the day. So I'm thinking we've got about another hour to go before we start seeing a great deal out here that makes me think that this is indicative of anything more than maybe a little market gas over the weekend. But the weakness, or the broad weakness, of some of these stocks up on light volume, like Apple and some of the ones I was playing, hoping for a short squeeze. I like the odds. Doesn't probably going to look like it's going to pay out this time, but it was, how can I say this? It's not incredibly useful, but I think we're going to see useful information probably by the end of the day. Anyway, we were looking at some charts, and some of these things are kind of interesting. Some of the ones that were moving out here today, like I said, the more dubious of the ones out here, stocks like Tesla, looks like this thing is in an ABC down. I think you can make a fairly decent case for an expansion model on this that would take it for the 1-to-1 to 185.89. And kind of nice moving out here. I could still see this thing kind of go sideways out here till the end of the year, but I think we've probably got everything we need to set up at least a projection for that 185.89. My guess is it's the volume today, 6.2 million shares. You need the last major one to have the October 15th low to have 9.1 million shares. So 6 million, can we get up to that level? I think we can. But we're kind of in a congestion zone here. Again, I'd love for this thing to slowly squeeze up into the end of the year where I could take a good shot at it in the last couple of days of the year. Amazon also showing a little bit of weakness. Part of that is, of course, a issue with retail sales numbers. It seems people are buying extremely specific things. They're buying a new iPhone Plus, not buying so much of the iPhone 6s, but the 6 Plus. They're buying a very, very expensive new cars over the last month, probably a bad sign. In fact, the highest rate in the last 15 years, the average car payment over the last month and a half is about $450. Certainly not cheap when we look at the average. So a lot of the people on the higher end of the market are buying very, very expensive cars. To me, long term, that's kind of troubling for the marketplace if we have any kind of recessionary move over the next year. I suspect that we are going to have that crude is telling us that. Of course, gold right now trading at $215.30 an ounce, and crude up off the lows from Friday, and what the market thought was a surprise. That's probably the weird thing, is the market's acting very differently than you would think it would. I figure everybody knew that OPEC was going to do nothing, but it got crushed anyway. We have movements in things like natural gas that don't make a lot of sense to me. Some of the movements we have do. Copper was like $2.90 the last time I looked at it. That continues to tell me we've got a deflationary and a recessionary world economy. And, of course, when you look at what is going on in Europe today, what do we have out here? We flip down here. Off 1% in the FTSE. The DAX was a little better, just off 0.2. France was off 0.3. Spain was off 1%. Portugal off 1.3. Italy down 1.6, and the Irish off 0.3. Greece was closed today. Dollar index also a little bit of a pullback, but you think that would be a plus for the stock market, not just the gold market. But as we look at the dollar index, it's off 37 cents. But again, we're off the lows out here. I think the dollar index is headed up to around that 92 area. I think we're just gaining steam and pressure. I'm not looking for a big pullback here. Anyway, we'll be back in a minute. Give me a ring.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, just going through and trying to get rid of much of this Cyber Monday sales stuff. And Pizza Hut ads. Apparently, they must think I'm ready to eat a lot of Pizza Hut because I'm getting Cyber Monday deals for Pizza Hut, too. But I'm going through trying to see if there's anything really moving out here. But at the moment, I don't see a lot. And again, you can always email me if you can't call at path@tfnn.com, and we'll be more than willing to take your phone call. As we start the second segment out here, we're back close to the lows with almost 2.7 billion shares. So we are getting some fairly decent volume out here, but kind of tough to see a great deal of huge movement in the last few minutes. And some of the weaker stocks, it must be some of the bigger stocks out here. And of course, Apple trading at 115.15 right now, down about $3.75. And I think I've been talking about this for a while. I didn't think that the big move would happen until the end of the year. We're probably in an upper trading range in Apple. But I think on Tuesday last week, we were talking about some of the suppliers to Apple that also looked rather weak. Comparatively, they're probably still strong, but we're probably getting close to some kind of a high in the moves out here. for at least Apple. I think everybody that wanted to buy one, what do you do after that? You have to sell some iWatches, and those not getting quite the love that a lot of people would think they should. Just seeing if anything else is going on out here. Gold at $12.15. Silver up almost $1, 95 cents at $16.50. Platinum up $39.30. And copper's up, but it just bounced off the bottom there. I don't see that being a real indication. Some of the other ones probably much better indication. And, of course, natural gas off fairly strongly. So a lot of mixed streams, kind of like in Ghostbusters. They say don't mix the streams. I think all we have is mixed streams here today. It's going to take maybe a day or two for these stocks to actually start sorting out what's going on in the market. We got about 2.5 minutes left. Let's start looking at some of these charts because I think these are the ones I want to be watching and see how they react here at the end of the day. Buffalo Wild Wings got a big pop. Everybody was pushing the stock because they said that we're going to raise menu prices. I don't know how they can. I've been talking about this one, TGI Fridays or some of the other places, and all of them, maybe they don't have as many TV screens as Buffalo Wild Wings, but it seemed to me very expensive. Was kind of watching these highs out here in the 167 area. We've had 3 now. The July 1st one at 167.36, 1.1 million shares. We got into it with higher volume on July 29th, so most likely we're going to get a retest of that 167.64 from July 29th. So we've got into it the last few days. 316,000 shares on Friday, of course, not a big deal. 197,000 today, though. Certainly we're running out of juice, and there's a nice juicy gap down here from about 134 to 145. My guess is that if we continue with light volume after the beginning of the year, probably after Super Bowl time, my guess is this would be a good candidate to come back down to this 140, 135 area and fill most, if not all, of that gap. Bud, old Mr. Bud himself, BUD is the symbol for Anheuser-Busch InBev. This was kind of interesting in that it has gone up and tested its previous highs. I'm looking at the June 20th high at 116.65. 5.1 million shares got into it on Friday with 2.7 million shares. Of course, not a big deal. We were going to have light volume anyway. But to see this thing come in with high volume today, 2.7 million shares, certainly not the 5 million shares of that June 20th high. But we are getting some volume in some of these bigger names, which I find kind of interesting. We got a lot of charts to go through. In the meantime, you can email me at path@tfnn.com or call me at 877-97.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And Sandy from Newport Beach wrote in to path at TFNN.com. Ask about you, Gaz. And Sandy's in Newport Beach, kind of like a Marina Del Rey area. Very nice, pretty place. And we looked at this, and of course, certainly you got all the huge volume out here on a huge gap down. That suggests at least you're going to come back out here and test the last major low, which was $10.02 from the October 27th low. And my opinion on it, I think we've got a lot of algorithmic trading going on here, and this may be not a flash crash, but a tiny crash. And it may not be localized just to a few stocks like Apple this morning, where we had a run on the bank on that one for a very few short minutes, starting about 9:50 this morning. Seeing such huge movements in things like gold and others makes me think that we just had a few people out here trying to rattle the cages of this market when it wasn't moving to the way that they believed. But it is interesting. In fact, starting to see some articles show up in the news that are now dissecting the early morning activity, especially in Apple, where they ran all the stops down to the bottom. And probably nothing new out here. And this is actual. I checked during the break. The actual low for Apple today was 111.27, and that knocked off about $40 billion in market cap just this morning. Of course, a lot of that has come back. But this is not the first stock that acted rather weak. But my guess is that they'll be pumping this one back up fairly quickly. Now, back to UGAS. You know, you got to test that low. You never had a test of that low. It wasn't that high a volume, but you would have liked to seen it tested before this market took off. And another thing is that a lot of these things, no matter what I'm looking at now, are trading rather wildly and different than the way I think they should act. There's an old saying in reminiscence of a stock operator about no prognosis, no profit. And the problem is I can't really tell you what is going on here, but there is something going on. From the moment that we had a movement in the gold down on the Swiss announcement to where it popped back up because the Indians decided that they were no longer going to have a import quota restriction on gold, set this market up for quite a huge seesaw, and it almost looks so desperate as to be planned, if that makes any sense. I suspect that what we see a great deal in natural gas is something that has gone on for years. That is a natural hedge. If you are long crude, most of the houses will have at least part or some of their trade short in natural gas. And if they are short crude, they will be long natural gas. And just the huge move we have out here, to me, looks like a correlated pairs trade from that energy sector. So I'm not going to put too much into this today. What I am going to see is that I think crude's probably going to go sideways for a few days. And what we want to do is watch natural gas to see whether this was a one-time correlated event just because of the huge move down in crude, or if this is a longer trend in the underlying natural gas sector itself. And my guess is that we just kind of blew this apart based on the movement of crude and not the true long-term direction of natural gas. But if you can, probably over the last 2 or 3 years, use the correlation feature in Excel, there are a few things that most of the time correlate better than crude up, natural gas down, natural gas up, crude down. So why I don't have any knowledge sitting in there mathematically and statistically, it looks like there's got to be a pairs trade on almost all the time between natural gas and crude. So I would be not only watching this, but watching the action of crude over the next couple of days and seeing happening. Yeah, I differ. Somebody has a differing opinion, which means they're wrong. So, but I digress. Anyway, we're going to look at some other stocks out here. You can email me too at path@tfnn.com, and or you can call me at 877-927-6648. But certainly a very interesting trading day for coming back from a vacation. But I digress. Anyway, let's look at some of these other ones out here I wanted to see. Micron was very interesting to me in that this thing was up with very light volume the last few days. You could be saying a triple top in this one. Probably the most interesting thing is we got into Wednesday with 18 million shares, which has been this line of resistance. Starting on July 16th, $34.84, 30 million shares. We got into it with 33 million shares on September 29th at the exact same price to the penny. But volume increased a little, so we know we're going to get one more retest. But as we broke through that on Wednesday, 18.3 million shares. On Friday, we had 11. And, of course, today out here with 14 million shares. Just makes me think that maybe a top is in, although I wouldn't be shorting these stocks. We also have to be watching the stocks that supply Apple very strongly. And as I said, I think maybe the Tech Insider, or was it on the radio? that I was very interested in how weak a lot of these stocks in the support stocks for Apple were looking. OmniVision is one that makes a great deal of cameras for the iPhone family. This one was up on the August 14th high at $28.34. And we've got going through there on Friday with light volume, not surprising, but 1/10 the volume. And then closing back down, volume picking up slightly today, but not enough to make me think that it's time to throw these things overboard. But I think what we want to be doing is really starting to focus. If you want to know where Apple's going, you probably want to start watching a lot of these support companies, companies that make memory like MU, companies that make the cameras like OVTI, and some of these others out here. Wanted to see also how some of these other stocks that were in the housing sector we're doing. You came up with basically 4 dojis or 5 dojis in a row in Ryland, RYL. That September 17th high, $38.80, 1.3 million shares. Got into it with at the most. Well, you got 960,000 shares on the 21st, 726,000 shares on the 24th, on the 25th, 500,000 shares on the 26th. 400,000 shares. Friday, 400,000 shares today. Let's call it 500,000 shares so far today. So is the volume really picking up on these? Is the energy really poor? The answer is no, but I suspect we could go higher out here and set the hook. Starbucks. Everybody looked like they were getting a great deal of Starbucks everywhere I went. And, of course, with a higher coffee prices, very interesting. But again, another test on light volume up here, not really moving down. The July 24th high at $80.64, 8 million shares. Got into it on Friday with basically 3.4 million shares. And today, 2.7 million shares. So not a whole lot out here. The energy kind of weak when you compare it longer term out here, but not all that bad. But certainly looks like a lot of these things are trying to set in some kind of high. Another one in memory that I find desperately informative is SanDisk move. This one gapped down on huge volume on the 17th of July with 29.6 million shares. Tried to come back and fill that gap on September 19 with 4.7 million shares. Tried to come back and fill this gap yet again last few days on the 26th with 2.2 million shares, 1.6 million shares on Friday, and today down on 1.34 million shares. So I think we can still have some hang time, as they like to say in basketball, with some of these stocks up here. But we'll have to look at them. Coca-Cola. Things go better with Coke, but certainly not a lot of volume. Kind of the safety trade out here, usually. This thing came down on fairly strong volume, up on just slightly lighter volume. When we're talking about the move, the October 10th high at 44.87 with 26 million shares, popped down, lost 10% of its value to the October 22nd low at $40.10. You've got a high volume low at 55 million shares out here. Back up to this high with 14 million shares on, what was it, a few days ago on the 21st. But light volume, 10.5 million shares on Friday, 7 million shares here so far today. Again, just looking like they're putting out kind of a, what can I say, a cover, an upper trend line, kind of a lot like that. Kind of hard to actually see what we've got going on here, but take what we got. To what other stocks out here that are of interest out here? J&J, another one. Wanted to see how this one did. It's kind of a safety trade also. People pushing cash in here when they're worried about the market. Now, this one actually one of the more bullish of the charts that I'm looking at, other than it got up to these highs and volume did kind of tail off. But the energy up to that high actually stronger, which is most of them were still a little weaker. Johnson & Johnson actually stronger. The September 24th high at 108.77 with 1.3 million shares. Got into it with 9.3 million shares, so it was short. We kind of pulled back a little bit, but 2 nice days on light volume out here with the market pulling back. Not that much out here in Johnson & Johnson. Certainly looks like this thing could go higher. Not a valid breakout, but, there are a lot worse out here. OVTI, Ryland, Starbucks, SanDisk. Let's see what else we have out here. We looked at Bud. Let's look at BTU, which is Peabody Energy. Certainly blowing through the lows. It's certainly got the kind of volume that it's going to need by the end of the day to set a new low. BTU, of course, in the natural gas sector. Really, we've been looking off this October 10th low at $10 with 13 million shares. Got into it with 11 million shares, had a nice little bounce, came back down. But, of course, even on Friday, which should have been light volume, 11.4 million shares on the downside. Today, 11.8 already. So you've got everything you need for this thing to break out. Let's take a longer look at this thing. And, man, it's just down, down, down. Anyway, what else can you say? See what else we have here. CBL Associates, CBST, Cubis Pharmaceuticals. Saw a little bit off the top, kind of like when I go in to get my hair cut, just a little off the top. And we look at some of these stocks in the IBB or around the IBB, or even in the same neighborhood as the IBB. Cubis Pharmaceuticals, when you're looking at this, really wanted to see, this thing go above $74.18, the June 23rd high that had 1 million shares. So you're looking for like 1 million shares out here. And it is very weak as you get a nice day on the 23rd of October. But that was still just getting into that candle. Since then, very weak volume as we have up here, and some little spinning tops up here. Let's take a quick look at the IBB. That thing looked earlier to me stuck at $300. Yeah, it is. Volume up a little bit, but it could have been a lot worse, up to 307 on Friday and down to $300 today. But I don't see anything that would say either trend line is busted and or that people are going to ban this sector anytime close. CVC, Cablevisions, boy, talk about up on light volume. CVC is the symbol. Cablevision Systems. This thing had a spike on July 29th to $20.42 with 7.5 million shares. We got into it with 1.8 million shares on Friday and closing back below. And volume, not really that exciting out here. Energy was decent on the way up, but less than on the way down. And kind of a prototype of what's going on out here in the market. We'll be back in a minute. You've got plenty of time to call me at 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we got a lot of email, and we'll have to go through it fairly quick. Everybody waited in the last few minutes, but I appreciate your emails. First question, Dave in New England, is this the bottom in gold? And I would like it if it would come back and test the 109.67 when we're looking at the GLD out here. I guess you could make a comment that it did get tested, but I still don't like it. We've got a lot of movement, a lot of volume today. My guess is that we're going to get some sideways action in gold. And that's going to tell us a great deal. If this thing closes back below 1180 again, Katie bar the door, I think we could see $1,000 in gold. I do not have a position in it, so I'm not betting either way with my cash. I just know that if we're going to get a low out here that I'm going to buy, I'm going to be darn sure that we've seen it and it is brilliant. Is the action today, if you're long, very encouraging? The answer is yes. I just don't see it anything more than a lot of market gas, a lot of cross currents coming out here, and I don't like the way that any of the markets are trading. I'm very nervous to be long anything. I wouldn't be long a position like this. I would probably be buying options in it if I had, or transferring to options now and pocketing any cash if you wanted to stay long. I certainly wouldn't have an equity position out at the moment, but I know I could see a lot of people being very bullish here on gold and the movement on it. But to me, last week's movement, this week's movement, does not seem to be like the kind of movement I see in markets that have put in a bottom. I'd love to see a blowout where everybody gives up. Too many people wanting to buy every dip in these. Okay. See what else we have out here. Another question. What do you think of rig at 20 for you bottom fishers? Well, that is it. What else we have? Rig. Okay, let's take a quick look at this. Only have a minute and a half left. Transocean Limited. It's hard for me at these levels in crude to see how any of these offshore rigs don't go to, well, in this case, probably go to $5. It is just so cheap to produce shale now compared to drilling offshores. We've got so much supply coming on from countries like Brazil and South America and the rest, and of course cheap oil from the Saudis. My guess is they're going to keep the pedal down on cheap prices for 6 months, and I would have to see a change in what OPEC did to make me think that I would want to be long rig or any of these other stocks. Along with copper or some steel or some of these metals other than gold, also telling us that deflation is not here. But I look at copper at, $291 right now, and you just have to look at it and go, this, we are getting kind of a recession in the markets out here. And, of course, they downgraded to Japan last night, which only helps strengthen the dollar. But I think we're going to look at a couple of days out here before we get any kind. A lot more market gas than anything. So I'm not going to hang my hat on it. I want to see some kind of trend. And I just don't have it. I see a lot of wild action that may or may not be algorithmically controlled. I know other people will disagree. I'm going to sit back and make a decision. Anyway, see you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.